But talking about today itself, it was a touch and go moment with that 19,500 mark for the Nifty. We were very close to the all-time high levels, but made a bit of a U-turn from there. Ended almost 50 to 100 points off the highest point of the trading session. So that's how the market texture was. Separately, if you look at the other internals, as far as the market is concerned, it was the auto stocks that were in the front, in the top gear today. Eicher Motors was one stock that we were watching out for. Maruti was doing well in the trading session. So a lot of these names showing quite a bit of bounce back. Can't say the same about metals and the PSU banking names because they saw a bit of a profit booking. Yesterday, of course, there was quite a bit of fervor when it comes to the metal names as well as PSU banking names. Today, a bit of profit booking. However, the spaces which saw fresh buying today was clearly defense as well as industrials. So names like Garden Reach, Mazgaon Dock, Cochin Shipyard, Bharat Dynamics, they were firing away in the trading session, and add to that list names like Polycab, ABB, Siemens, L&T. They were all fairly excited in the trading session, and excitement was palpable when it comes to the IT sector as well. So TCS and HCL Tech reports numbers. Of course, it will be post-market hours, but nonetheless, a very important cue that the market is watching out for, and important cues lined up with respect to the macro data as well. So inflation coming in for India as well as US tomorrow. We'll get the IIP data. We'll also get a whole host of other details coming in with respect to IPO and other market action. So lots ready to watch out for when it comes to tomorrow. But talking about today itself, a bit of consolidation is what we witnessed. The big question is, will this consolidation continue or do we rise to higher levels? And Kunal Bothra, as always, is joining us to answer that question for us. Kunal, consolidation, no trade zone?
Good afternoon, Anisha. No trade zone, consolidation, but then that doesn't mean that the view turns out to be negative for the indices. I would still believe that traders who are looking out to try and trade the index from current levels should wait for a breakout on the index just to get the timing right. So we've not changed the bias on the index to more of a downtrend from current levels just because the indicators are overbought. It's a very natural phase of the market trend in every kind of a market phase that after such a kind of a steep rally, the indicators they tend to get overbought. The market gets into a cool-off mode. Sometimes time-wise consolidation happens for a couple of days, and most of the times the time-wise consolidation takes maybe 2 or 3 weeks. So we can probably look at this way that it's just been 5 or 6 trading sessions of the indices consolidating. Hopefully, we may consolidate for another couple of days. So purely in terms of timing-wise, I would believe that it's better to try and wait out for the breakout for the index to go for a buy mode. But then I think the most important index which we should be tracking from here on, which could probably lead the benchmark indices, is the Bank Nifty, because that's a struggling index as of now. The index has been making a pattern of lower highs in the last 6 trading sessions, even though it's a marginal drop of just 800, 900 points on the Bank Nifty. But nevertheless, I think the Bank Nifty starts to turn around is when we expect a much more bigger upside on the Nifty.